Okay, plenty of stocks to talk about, so let's get straight to it, right? We have Siddhartha Khemka, Head Retail Research at Motilal Oswal Financial Services joining in. Siddharth, hi, good morning. Thanks for being with us. I wanted your thoughts on Interglobe Aviation. Very strong numbers, good commentary from the management. Brokerages are excited about the stock, but the stock has also run up quite a bit. At what stage of the rally are we in right now, and would you recommend buying it even today?
Yeah, very good morning, Sonia. Pleasure to be on the show. I think if you look at the overall aviation as well as the overall tourism industry, that has done really well. And after a long time, we are seeing the healthy performance from the aviation sector where they are reporting profits. In terms of the numbers, very strong numbers from Indigo. Uh, Revenue was up 26%, 8% higher than our expectations. Net profit of almost 19 billion, which is 1,900 crores, which is again Y and Y up to X. So what is good is that the management commentary continues to remain very strong. They are adding capacity, so they have suggested that they would be adding one new aircraft every week on an average in FY25. They are also looking at international markets as a growth strategy, which is helping them a lot, especially in terms of the profitability, because the yields are better and the routes are profitable. So that is another point which kind of gives a strong outlook for Indigo at the current juncture. So overall, we are positive. We believe that the Indian aviation industry is underpenetrated and offers significant growth opportunity for domestic airlines. The potential is also because of the expanding airport capacities as well as the significant aircraft orders that these players have put in. Now, in terms of valuation, yes, the stock has definitely run up, and there is risk of the competition coming up from some of the newer players and some of the you have Air India now be taken over by Tata. They are becoming aggressive. That could be a competition. Crude oil prices continues to remain a key variable for the aviation sector, and while we overall remain positive, we believe that at current juncture there is a limited upside, and hence right now we have a neutral rating. But I would say that in the near term, on back of strong numbers and the positive growth numbers that in Q1, Q2 that the company will be reporting, the stock could continue to be in momentum.
Okay, all right. Hi, Sid. Morning and good to see you. Well, what about the hospital companies? You know, Fortis, many other companies, Max, all of them delivering very good numbers. The fear is that are things peaking out in terms of the ARPOBs, in terms of the margins as well? What's the pick from that pack?
Yeah, Nigel, good to see you. So if you look at the healthcare space, we have been very positive on that space. Numbers, as you rightly said, are coming out to be very strong. And after a long time, if you see that despite the healthcare issues are not that much which we had seen earlier in the COVID cases. So now there's an overall structural improvement that we are witnessing in the overall healthcare companies. And within that, Apollo, which is the leader in the pack, we continue to like that. Which is our top pick, preferred pick within the overall hospitals. We have a target price of 7,300. What we also like is a Max Healthcare. The company is a mid-cap company. We are seeing a strong expansion from the company, and the profitability and EBITDA are seeing strong improvement. So we are expecting almost a 25% CAGR in Max Healthcare earnings going forward. Valuations are still comfortable. If you look at on an EV/EBITDA basis, some of these do trade at a premium, but we believe that with the growth and improving profitability, return ratios improving to about 17-18%, a Max Healthcare could also be looked at. The stock has run up, so we have a target price of 950, so about 10 to 15% upside there as well.
Yeah, check out Medanta as well. Medanta is also, I mean, since you're talking about hospitals, Medanta has fallen from 1,500 to 1,200. That's another very strong hospital sort of company based out of North India. Gurgaon, of course, the big flagship hospital there. Global Hospitals, that's the name of the company, the Medanta Group. Well, Siddharth, morning, Prashant here. Just a quick, do you track Zaggle, by the way? Does Motilal have coverage? Zaggle
morning, Prashant. So we have not yet covered on Zaggle.
Okay, all right. Again, very strong set of numbers as we were outlining earlier. So to your clients, Siddharth, so election results are 5 days away, and people are starting to wonder what is the best way to play a positive outcome, right? Because it's a light market, and we are at new highs, given, of course, yesterday's rally now. But still, I mean, immediately post results, they could be, depending on the results, they could be a move. So what are the best places to be in? Is it PSUs? What are your thoughts, Sid? If you've discussed that and your team's sort of thinking on this.
Yeah, Prashant, I think it's a right question to ask because this is what exactly the clients are asking us. If the current government wins back with a good margin, what sectors and what stocks should we play in? So I think the pet sector is the capex theme that we like, and that is clearly associated with the ruling NDA government, right from your infrastructure. So you have the likes of Larsen. It is a large cap. It doesn't have that kind of high beta. So even if things were to remain volatile, I think being focused on infra and on the large cap side, that gives the kind of a margin of safety. So capex theme, that is something that we like. So we like, as I said, infra. Capital goods is another theme that kind of clearly gets linked. So again, L&T, but some of the other capital goods like ABB and Siemens comes in there. Cement, real estate, and some of the other construction companies. I think that is the pack that clearly would benefit out of if the government continues to come out with on strong numbers.
Siddharth, this entire platform, new age tech companies have done very well this time, right? Whether not just Honasa, but there's Nykaa as well. Zomato did quite well. You had a couple of others, that, in fact, the entire consumption space. I mean, there was Jubilant Foodworks, Metro Brands, and the likes too. From this entire basket, which are the stocks that you still like?
Yeah, Sonia, I think, as you rightly said, there are two sets. A is the overall consumption, which is kind of inching up and improving, which is leading to a better numbers, be it for some of the retail companies, where even Avenue Supermarket has come out with good, encouraging numbers. And after the last few quarters where they have been struggling with the large store formats, the same-store sales growth has inched up. The margins for these large format stores have also gone up, and overall consumer demand has been pretty strong. So that is one company that we believe, Avenue Supermarket, at current levels, we believe can give a significant upside, being a large cap and the kind of defensive name that it comes with. So we have a buy rating and a 5,300 rupees of a target price. The new age companies, Zomato is something that we have been consistently liking. The platform fees that they have introduced has been well accepted, and that has brought a lot of change and improvement in the overall profitability. And the surprise was the sharp improvement in performance of Blinkit. If you remember, some time back, when the acquisition happened, the street was a bit negative on the acquisition of Blinkit because of the losses that it got. But it has the potential to bring in more profits than the core food delivery business. So the quick commerce is another thing that is helping Zomato. We again have a positive view and a target price of 220. So again, around a 10-15% upside potential in Zomato as well.